Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. In the world of precious metals, there's a conflict. And it's always either should you buy gold or should you buy silver? And which is going to do better at the end of the day? Now, I know diversity is key and a lot of people diversify into a little bit of both, but there's always the main portion of your portfolio, which is either one or the other. You're either a gold stacker or a silver stacker. And there's many reasons on why you would choose. Gold is a great way to store a large amount of wealth, a large amount of value in a very small area. You can fit $100,000 of gold in a shoebox. You can't do that with silver. So gold's very convenient if you are investing heavily, but silver, on the other hand, is very beneficial. Now, I'm going over this link from Kitco. It's talking about tactical reasons to buy silver, but gold continues to outperform. See, gold right now is seen as the safe haven metal. Silver is a much smaller asset used in the industrial world. And since the industrial world is getting hit so hard from COVID-19, that's why silver prices are also being affected. So anyways, let's jump into this article. So while gold's push above $1,700 an ounce, hitting fresh 7.5-year highs, is attracting a lot of attention, one bank said that investors shouldn't forget about silver. The silver market is rallying Tuesday as prices push to 1-month high above the $16 an ounce in the early session. Although off its session highs, May silver futures are still holding strong gains, last trading around $16.05 an ounce, up 3% on the day. Silver's renewed interest comes after prices fell to an 11-year low last month, and we saw that. It was almost at $11. In a report published Monday, Johnny Tevez, precious metal strategist at UBS, said it was only a matter of time before silver starts to push higher. Silver's a ticking time bomb waiting to explode. We see upside risks and think there's tactical opportunities in silver, she said. Silver has generally lagged the move in gold, suggesting to us that it is well positioned to benefit from catch-up trades, right? The gold to silver ratio has to normalize back down, meaning silver is going to either appreciate or gold is going to depreciate, but more than likely it's going to be silver appreciating. Although UBS is positive on silver, Tevez said the precious metals does face some headwinds. The global economy has ground to a halt as governments around the world have issued a stay-at-home order and shuttered all non-essential services in an attempt to slow the spread of COVID-19 pandemic. Tevez said the weak economic growth could impact silver prices and keep them contained in gold's shadow. And that's because the economy isn't growing, and that's where silver thrives from. We continue to struggle to see a sustained outperformance relative to gold, given that silver does not tend to attract the same safe haven and diversification flows as gold does. A weak economic backdrop also serves as a fundamental drag, given over a half of silver demand comes from industrial applications. Looking at gold, Tevez said that a push above $1,700 could attract renewed investor interest. See, when people find gold, then they usually find silver shortly after. She added that she sees room for higher gold in the near term. Currently, UBS expects gold prices to average $1,800 an ounce for 2020. June gold futures last traded at $1,766 an ounce, or up 0.6% on the day. So, I definitely think that gold and silver both have its benefits, but we know silver has the main potential at the end of the day with, the silver shortage, with the gold to silver ratio, with silver's many uses in the world, the still discovering uses. Scientists actually found a way to make silver 40% stronger without losing any electrical conductivity. They discovered this recently. So silver is still, very, 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 very opportunistic. So anyways, here's another link. Gold, silver bulls bask amid bullish charts, safe haven buying. So here's kind of going into the price. It's a little deeper into the prices. So before I move on, though, I'm curious, what's your ratio compared to gold? Do you stack a lot of gold as well, or are you mainly focused on silver, and why? I'm curious to hear why and where you think, what leads you to your strategy and your stacking strategy. So gold futures prices are trading not far from unchanged on the day Tuesday at midday, and after scoring a 7.5-year high early at $1,788 basis June COMEX futures. So silver prices are sharply up at a 4-week high today. Gold bulls are enjoying the strong near-term technical advantage to continue to suggest more upside for the yellow metal in the near term. Safe haven demand continues to boost gold, and to a lesser degree silver, as the global economy is still on very shaky ground. June gold futures were last up 10 cents an ounce at $1,761. May COMEX silver prices were last up 50 cents at $16.04 an ounce. Global stock markets were mostly higher in overnight trading. U.S. stock indexes are solidly higher at midday. More and more, it appears, North America and Europe have turned the corner on the COVID-19 pandemic. New York Governor Cuomo said Monday his state has seen the worst of the pandemic. Other hotspots in the U.S. have also showed signs of simmering down. Leading U.S. health officials are now saying the world's largest economy could very likely begin to reopen in stages beginning in May. So that's very good news from COVID-19. It looks like we've hit the curve, and it looks like this thing is starting to die down. The present COVID-19 situation appears to be a sweet spot for precious metals. There is enough confidence in the marketplace for traders to want to trade markets, but the global economies are still in a very bad shape, and it's uncertain when they will fully be operational or healed. Right? We don't know how much longer this is going to go on for and how much more damage it's going to be doing. So major corporate earnings reports are now being stated released, which will show the early impact of the COVID-19 pandemic and be a sobering reminder of the tough economic times at present. J.P. Morgan's results today were a testament of a crippled U.S. economy. In overnight news, China, the world's second largest economy, saw its March exports down 6.6% year on year, which was less than expected. That's actually not bad. Imports were down 0.9% in the period, also way less than expected. China watchers deemed this as data as upbeat, showing the Chinese economy is recovering from the pandemic. The important markets today see NYMEX crude oil prices trading solidly lower, around $21 a barrel. Oil market bulls are sorely disappointed of the weekend of the OPEC and other major oil producers' agreement to restrict oil output did not boost crude oil future prices. However, there is no consensus on how much oil production will be reduced. Some market watchers think 10 million barrels a day, and the more optimistic bulls think 20 million. There is more agreement among analysts that the worldwide oil demand has dropped by at least 20 million barrels a day. Meantime, the U.S. dollar index is lower at midday. The 10-year U.S. Treasury note yield is trading around 0.73% today. So, a lot going on, but I'm just glad to hear that COVID-19 might be at the turning point. It looks like it might simmer down and things might try to catch up sooner than expected, way sooner than expected. But we don't know. There can always be that left ball curve. We still don't know. Technically gold or June gold futures bulls have the strong overall near-term technical advantage. More upside is likely in the near term. Gold bulls' next upside near-term price breakout objective is to produce a close above solid technical resistance at 1800. Bears' next downside price breakout objective is pushing prices below solid technical support at $1,700. First resistance is seen at today's high of $1,788 and then $1,800. First support is seen at today's low of $1,755 and then $1,750. So May silver futures prices were near the session high and hit a 4-week high at midday. Silver bulls have the overall near-term technical advantage. Prices are in a 4-week-old uptrend on the daily bar chart. Silver bulls' next upside price breakout objective is closing prices above solid technical resistance at $17. The next downside price breakout objective for bears is closing prices below solid support at $14.50. The first resistance is seen at today's high of $16.30 and then $16.50. Next support is seen at today's low of $15.65 and then this week's low of $15.38. So a lot going on, but it looks like COVID-19 is going to, well, the best news is, the best positioning right now is for silver, because as the industries pick back up, as the world's second largest economy, China, starts to pick back up, silver is going to be used again. More and more silver is going to be needed in these economies as silver's, industrial uses and applications it's used for. So gold is more as a safe haven, but if things start to, this is where the gold to silver ratio can close down, because gold was used as a safe haven during economic turmoil, but things in the economy are looking better, so people will be less applicable to be investing in the gold, and they'll go towards silver because silver's industrial uses as the economy picks up will be greater and more useful and more beneficial. So there's more potential in silver, and this is where the gold to silver ratio can close back in, and this is where silver can really start to rally. Anyways, I appreciate you guys and gals for tuning into this video. The 2 links to these articles will be in the description if you want to check them out yourself. If you thought this video was educational, informational, or just entertaining, make sure to smash that like button. If not, oh well, it's okay. I appreciate you for tuning in, especially tuning in this far in the video. I appreciate you guys so much. Thanks so much for tuning in. This was Silver Slayer. I'll see you guys soon. Peace.